Hello, and welcome to Let's Talk Tax, the show for growth-minded CPAs and real estate professionals in tax. I'm Dave McGuire. On today's episode, we'll dive into a hot topic in international tax, transfer pricing documentation. We'll explain transfer pricing as a baseline and its role in international transactions, the importance of compliance and risk mitigation, and different types of documentation. Joining us today for the first time on Let's Talk Tax is John Bodur. John works in McGuire Sponsol's global business service practice. Welcome, John.
Thanks for having me, Dave.
So tell me about yourself. You've never been on this, so tell me a little bit about yourself.
My name is John Bodur. I'm originally from Turkey. Came to the United States at 12. Been here for 20 years. I graduated from Western Kentucky University with economics and finance. I hold a master's in accounting and master's in business administration. Been in McGuire Sponsor for 16 months and doing international tax and transfer pricing for about a little over 3 years.
You live here in Indianapolis?
Yeah, so I live in one of the suburbs of Indy with two kids, two sons. They're 6 and 2, and I have a wife. So yeah.
Okay. That keeps you busy.
Yeah.
So you got something to do other than international tax.
Every day, yes.
Even though I know this is all you want to talk about, but a family is important as well. So
You're right.
So briefly, what is transfer pricing?
So in a nutshell, we can call transfer pricing is the practice that represents the charges in between intercompany in terms of in return of goods and services. And say that you are a U.S. company that you would like to manufacture in Vietnam or China or just outside of U.S. and you just open a manufacturing facility there. The charges that you pay from U.S. to China, that will be included in transfer pricing. In a simpler example, that's how I can describe it.
So why would I need that? Why do I need to know the charges charged between two different companies within? Don't I just have a company, I go through and I go, I made this much money, and why do I need to know the difference between the different countries?
I think that's a good question that people who don't deal transfer pricing every day asks. And the answer is because tax authorities around the world would like to know how much you're charging in our company because they don't want you to shift your profits to a country, so to speak, that has a lower corporate income tax, for example.
So you're saying I can't just open up an entity in a tax haven and shift all my profits there? I thought that's what all the big companies did.
No, that's not how it works. And if anybody can try to do it, but I'm sure tax authorities will be asking questions.
So when do I always need it? If I've got a property or an entity overseas, or is it just if I feel like I'm sheltering some income, I need to do it?
That's another thing that we encounter a lot. A lot of our clients, whenever we initially talk to them about this, they just say that, hey, we do this there at cost and we just charge it in between just at cost. It doesn't really matter from the tax authority purposes. They want to see the documentation that they provide guidelines for in place for you to justify those charges in between. Whether you're doing it at cost or not, that's irrelevant from tax authorities' perspective.
So you're saying even if I'm just doing it at cost, I might need some documentation explaining where those costs are coming from, or is the documentation saying, no, the amount may not be the same as the cost that I'm actually charging?
You must have documentation. For a company saying that we're doing it at this cost, that doesn't really say much in terms of, again, from the tax authorities' perspective, because they provide the guidelines and they include items that will be that should be in the study.
So you say I must have documentation. Explain a little bit more. Why do I need documentation? What happens to me if somebody comes to me and I just go, oh, I don't have the documentation, and then I call you after that?
So that's another tricky part about transfer pricing. Question that we get a lot is, so should we submit this with our tax return? And we say no, because transfer pricing documentation could be used as a sword in terms of profit shifting, but it's also a shield from the tax authorities. If you were to be audited and if you were to be asked a documentation, you should have it in hand. And if you don't, then they're going to look into it, and then they're going to, the penalties could go up to 20% of the undercharged of the amount. So there could be serious penalties of not having one in place.
So if I don't have one in place, and what do you mean by undercharged? So is that a lack of what I'm charging? So in your example, I've got an entity in Vietnam.
Yeah.
So you're saying if I'm supposed to be charging a certain amount and then I can get a penalty from that's from the U.S. authority?
It could be from both U.S. or Vietnam, but if we think about the U.S. perspective, and if you're not, if you're paying more, for example, to the Vietnam entity, that means you're not keeping the income in U.S., and the IRS would definitely question that and asking, why would you send, 200 instead of 100? And that 100, we can talk more into it, how that 100 is being determined, how the IRS gets that, standardized expense or standardized amount. But they are going to question why and how much you're doing things for.
So are all countries the same? So if I have something using your 200 versus 100,
yeah.
If I have something that stands up to the requirements in the U.S., is that likely to stand up the requirements of Vietnam or another country?
So usually what happens is OECD is the main authority that provides overall guidelines for transfer pricing. And then what happens is certain countries' tax authorities takes it, and then they just implement their own specific rules. IRS is one of the most thorough guidelines that they provide. I'm going to say globally, but in a case that we studied on that was in Colombian tax revenue asked for further information, and we did provide it, and we updated the study, accordingly. But it does change from country to country, so you just got to be, especially know what countries require what.
Is there a de minimis area or where I don't need to worry? Let's say, we said 100 versus 200. Obviously, if I've got $100 moving around, I'm not worried about that. But is there an area where this becomes more critical, or is it any time I've got these intercompany transactions going overseas?
That is really dependent on the country that you are, questioning as well. For U.S., there's no threshold. You can move $1 from here to anywhere, so to speak. You have to have a documentation, in place. But there are other countries that, have that type of threshold in terms of amount.
So if I'm a U.S. company, is this any other country? I mean, we talk about overseas. Are we including just going up to Canada, Mexico, or is it just if I'm moving stuff to Vietnam or somewhere else?
It's pretty much anywhere. Even if we do it in U.S., sometimes even states might require that. We saw a case in New Jersey that happened. So it's any country.
So now we got a general idea of why I need a transfer pricing study. So what does it entail? What's the components of a study? What do you ask for when you do a study? How does it get put together?
So we try to understand how the business works overall, and try to understand how the business cycle works for the company, and also IRS has its own guidelines in terms of what a company study should be included, and it goes as generic information like an organizational chart should be included, what transfer pricing methods selected should be included, and what methods that were not selected and the reasons for them, because IRS wants to know, why did you pick method A versus method B, and what's your reasoning? And if you don't get to provide that type of a context, so to speak, you're going to get questioned again. And you need to have comparables whenever we're doing a full study, and I can explain that here in a minute. But that comparable is the standard that I was talking about that's coming from those comparables.
So when you see companies doing this, is this something that most companies already have, or are business owners sometimes not aware that they even need these?
I would say 90% of the business owners, or sometimes even CPAs, they're not even aware of the need for it, or they tend to be a little shy to address that situation because some of them has not been addressed for, say 5 years, 6 years or whatnot. So we try to almost educate them in terms of why you need a transfer pricing study.
Now, is there anything new or new trends or changes that have caused this, or is this just something that's always been around and people weren't aware of it beforehand?
This has always been around, but here's what I'm going to say about the importance and the emphasis that has been happening in the tax world overall on transfer pricing. Last November 2023, I think, multiple IRS officers had mentioned that they were going to be putting more resources, more funding towards transfer pricing, and having that scrutiny almost. Mm-hmm. And we know that not only multi-billion-dollar multinational firms are being audited, they're even trying to address those smaller companies that have the type of intercompany relations.
So if I'm a CPA and I'm sitting here and I never brought this up to my clients, knowing that there's recently been an increase from the IRS's side, which that gives me an excuse as to why to bring this up now versus why I didn't bring it up 4 years ago, could be this increased compliance complexity with the IRS.
And I think that's a great point, and I think we understand that that type of conversation could be uncomfortable to have with if you're a CPA, and if you want to have that conversation right now with your client, that could get uncomfortable. But we do want to educate the CPAs and the clients about the exposure that this creates, and just because it hadn't happened in the past 10 years, so to speak, that doesn't mean that it's not going to happen. So we're just trying to educate both of the parties.
So either way, it's probably better to have the conversation now than to wait until the IRS
100%.
Knocks on my door.
100%.
So is this a dynamic thing? Did it transfer pricing, has it changed at all, or is it really just it's always been this way and it always will be?
So transfer pricing had been changing ever since the inception of it, and how to follow these changes is OECD provides guidelines, IRS provides updates and guidelines. We just basically go and update our practice accordingly, and just to make sure we comply with those guidelines. But yes, it's very dynamic. I always try to explain it like it's more art than a science, in terms of there's no X plus Y equals Z. It's more like there's an understanding and common sense included in it.
So with that there's more art behind it.
Yeah.
Tell me about what's the type of documentation you're putting together. What are you doing other than just saying, here you go, here's my transfer pricing study? What do you actually, walk me through some of the nuts and bolts.
So in a comprehensive study, we have 3 different files. That's master file, local file, and country by country reporting. We will include, as IRS and OECD directs us, we will include generic information in the master file. That's the disclosures that we are, responsible to put it in there, other organizational charts and whatnot. And the local file, I think of local file as more like a closer screenshot of the transaction that we are covering in the study, and the comparables that we're including. And let me just talk a little bit more about the comparables. Mm-hmm. Per IRS's guidelines, what we do is we go, let's say the same example, you want to have a manufacturing facility in Vietnam, and you charge 100. And IRS says, well, how can you justify this charge? And what we do is, as if the next door to your manufacturing facility, there's another manufacturing facility that's not related to you, and we're basically getting the price from them and comparing to the intercompany charge that you and the related entity had it, and then we compare it. So you pay $100 and next door charges for $90. The question is, why are you not charging $90 and why are you charging $100? So that's the art side of it, rather, I can say, about the documentation. And then country by country reporting, the last item for the comprehensive study is basically we just include the company's financials for disclosure purposes. Again, this is required per the guidelines.
Okay. So are there times where you go into a company and your example where they're charging 90 and maybe they should be charging 100 or vice versa, and you go, you know what, you should have actually been charging intercompany significantly more or less on this transaction. Does that happen often?
Yeah. Last month we were working with a client that there was a discrepancy in terms of how much they had charged and what we come up with the comparables, and we recommended a change in amend their returns and just look through the returns the tax returns that they had filed and proceed accordingly.
So that can be done after the fact. So let's say I'm doing my return today and I'm working on my return for last year. I can go back and make those intercompany transfers now and adjust those things?
Right.
Okay. Now, you mentioned on each transaction. Does this have to be done on every intercompany transaction, or do you do examples? How does that work?
So what we do is we collect the information from the client to understand what kind of a company it is, like I said, and what kind of a transaction that's been happening. And we do recommend to get it done for every single every type of intercompany transaction that you have. Now, if you're, let's just say you're producing red ducks in that manufacturing facility, we don't need another transaction for the yellow ducks toys that you're producing in that. But if you are paying for let's say a management fee, for example, then that will require another transaction, and then we need to cover that transaction accordingly.
So I don't have to worry about if it's the red ducks, if it's off of the yellow ducks, but if it's purple ducks, then maybe. I get the idea. I just obviously it because I could see companies just having millions of transactions at some of these, especially with smaller transactions. So we don't have to do it for every single one. If there's like-minded transactions, we might be able to combine them.
That's exactly right. We look at the fundamentals of the transaction.
So when you're going through, let's say I'm coming up to you and I'm going, hey, I've done transfer pricing studies, or I've seen transfer pricing studies, or maybe I haven't even done it before. What are some of the things that you see that people do incorrectly, or pitfalls that you might see?
So I think one of the things that I see that's kind of misunderstood by either clients or CPAs or both is there's this thing called low value added services. Now that is more, that does not, per OECD guidelines, that does not require a full study, so to speak, and you can just put the wordage together and prepare the master file that we talked about, like the generic requirements, and then you don't have to do the comparable side of it. But the thing that people are not, I think, aware is there are certain countries that require different testing for this low value added services, so to speak. And for example, China has a 5 different step testing for this. And if you don't go through those tests, and if you just say, okay, this is, at low value added, it means like not as supportive, not as significant, and if you don't go through that, then Chinese tax authorities are going to be questioning your study, and it's just basically not going to be compliant.
So you are able to actually track and see if I've got a company in the U.S. and I've got subsidiaries in China, Vietnam, India, and you can go through and actually determine whether or not each country sees that as a low value.
Absolutely. So whenever we get the information from the clients, what we do is we go through those countries' the guidelines and the most updated guidelines to see how can we be compliant if we haven't updated for an X amount of time, so to speak, and then we do an analysis and then we implement it to our study.
So when you're going through that, how often do you see that there's been mistakes made in the past or something else, or is it typically that most people have had it done correctly moving forward?
No, we see. I'm going to say 50% of the time that whenever I reviewed the study, that I did not think that it was done correctly, because I think there are some times that the preparers wanted to shortcut things, and I don't think that is the way to approach it, especially when it comes to something not as concrete and as gray as transfer pricing. We want to be at the conservative side at the compliance.
Now, you say that. So why would people take shortcuts? Is it just simply a cost thing, or why would you take a shortcut on transfer pricing?
I think lack of understanding, I think, is a contributor to it. I think being cost effective might be. I'm not really sure. It does take some effort. You got to go to Vietnamese, transfer pricing guidelines and try to figure out what they require specifically, and then implement it to your study. It's just, it requires a lot of diligent work.
Now, let's say I'm a business. I have a manufacturing business. I'm making, in your example, I'm making yellow ducks and purple ducks. And I'm opening up a manufacturing operation in France.
Yeah.
What should I be doing from day one to make sure I've got my documentation in place so that when I come to you, you're ready to move forward?
So another one of the, I think that's a great question, and one of the determining factors of how those standardized comparables work is geography. As anybody could imagine, France manufacturing costs versus Vietnam or China or whatever the case might be, it's just going to be different. So that will require the same process that we did for Vietnam. It's just going to be for France. So we're just going to, it's pretty much the same thing, but we need to look for the same, because it will be unfair to compare Vietnamese comparables to, the manufacturing expense in France. So we just need to do the same study for that geographical region. That's another, major player in the comparables.
Now, you've been doing this a while now. So do you have any examples of company, without using any specific details, but companies that have navigated as they're growing the increased documentation, the requirements on the filing? Do you have any examples of somebody that's walked through that?
Yeah, so we worked with a company that had a very, very specific, business, and they were the mannequin producers. And the client was very diligent, very, thorough with us on how he explained the business. And they were expanding, and they just opened a new facility in China. They had some IP in Switzerland, so we had to benchmark all of these mesh all together, and that was one of the most challenging, because again, if you think about it, you won't really see a lot of companies that are producing mannequins. It's a very niche that they do, and I think that was one of the most interesting cases that we worked, and we helped them grow, and we got that documentation and process in place for them, and they were very, very pleasant.
You mentioned something there, and I guess maybe it just triggered the thought in my head. So you mentioned that they were producing in China, but they had IP in Switzerland.
That's right.
So it's not just the transfer of goods and services. Sometimes it can be intellectual property transferring.
Absolutely. So if we go back to the duck example, and if you have a specific way to manufacture that duck, say that an intellectual property, and if that intellectual property is sitting at an entity in Switzerland, then that's basically you're utilizing that Swiss entity's IP. Thus, you're going to need a transfer pricing study for the same reason. Again, if you look at the fundamentals of the transaction, it's just different than manufacturing, so it triggers that requirement.
I'm not sure how much IP is needed for manufacturing rubber ducks, but we'll keep the example there. It could be. I mean, who knows? Maybe there's somebody that's figured out how to make ducks a lot quicker through the injection molding process.
Yeah.
Now, obviously, in today's day and age, everybody's talking about AI, technology increases, how we're going to streamline processes. Is that going to start affecting transfer pricing?
I think that's a good point, as AI is affecting everything. And we are expecting it to affect at some point, but I think still tax authorities are still wanting to have a common sense. Like, I think the France example that you gave was a good one. And AI might be able to mesh, Vietnamese, facility with French, but you still would need a separate study for that. And I still think some type of a common sense would be a part of transfer pricing at for the foreseeable future.
So you're saying that it's not just A plus B type situation, so it's going to be hard to train the computers to do that in the short term? That's
right. Like I said, it's really not a science. It's more like an art, and kind of at the end of the day, how much can you justify that art, with with the findings that you have.
And not to combine two things, but I'm assuming, let's say I'm a company that's developing AI.
Yeah.
Now I'm jumping around a little bit, but once again, as you talk, I get thinking. So if I'm a company designing AI and I'm utilizing that in a process that's in another country, that would go back to that intellectual property.
That's right.
So as companies start increasing technology, I feel like if they've got multiple locations, they might actually increase the amount of transactions they're doing because they're using that technology all around the globe.
Absolutely. That's if we classify AI as an IP, which it is, and the more different regions of your organization utilize that AI, you're right, that will increase the covered transactions that we will need to include.
Now, if I'm a CPA and I say I don't want to work with you, I'm doing it myself. What are some of the tools or things that I can start using to keep documentation so that I'm ready either when I call you or I do it through a different? What are some of the things I should be doing right now?
I think the starting point for that is there's a booklet that's online. It could be purchased on OECD's website. To go through that, they update it every year with minor changes, and sometimes, according to the landscape of international tax, they might have major changes. Start from the guidelines. It's a big book, but and then I'll go to the companies that I will be incorporating the study, and go to those countries' tax authorities, like for us, it's IRS, and go to their website and, try to gather resources through them.
So let's say someone is planning on calling you, though, but they haven't done it yet. Let's say I'm just starting up a new operation. Is there something I should be putting in place now to make your job easier when I call you a year from now to work on my tax return?
I would say it's very challenging for a person who's not doing this on a day-to-day basis to put something in place, with your words, without utilizing an expert's, skills. So, again, I think the most helpful that you can be to me is I'll send you an information questionnaire, and you just send it back to me, and we can start working.
Now, you mentioned that this has been around for a while, but I'm assuming we're dealing with multiple countries. We're not just dealing with the U.S. here.
Right.
Have we seen any changes in the regulatory environment in terms of legislative, or is it pretty much stagnant and it is the way it is and it's going to be that way?
No, it's definitely not stagnant. I think TCJA had some type of an impact on it, on transfer pricing, and it's difficult to talk about different countries whenever they're just definitely minor changes. And I would also say this, even though there's not legislative changes in concrete, so to speak, but sometimes tax authorities might be able to interpret a law that was in place in a different way whenever they look at an intercompany transaction. One of the examples that I think I wrote a blog about this, about the Brazil transfer pricing challenge that Coca-Cola faced in Brazil, and they basically undercharged, a Brazilian company undercharged American company, and they were trusting that process to be grandfathered in, and that was not the case, and tax authority went back and fined them. So yeah, it's very, very dynamic.
Now, do you ever get to a person and you work through a transfer pricing study? That's a good example. So somebody, maybe they undercharged Brazil or they undercharged a U.S. corporation where their tax liability goes up or down significantly based on what you've been doing.
Right.
Is that something that's common, or is that I'm just hearing you talk and I'm wondering, would that affect their tax liability?
No, it definitely does affect. Again, what we try to do is try to find comparables that we can compare those charges, and if it's more or less, we're just going to be honest, and we're going to tell them to make appropriate changes to their. It's hard to say that it increases decreases at all times, so it's circumstantial.
Now let's say I'm a CPA firm, and I've never brought up transfer pricing before. I didn't know my clients needed it. I don't do a lot of international work, et cetera. How do I start that conversation? What's kind of the opening to just broach that, hey, this needs to be discussed?
So, whenever we sometimes while we're doing compliance work, we go through the intercompany transactions that they had. And I think that's a good way to explain the client that, hey, you have these intercompany transactions or charges for X, Y, Z purposes. And by the way, in order for us to be compliant, we should be able to have get study done in place. But again, I think to explain it to a client from a CPA's perspective is, in my opinion, I think the intercompany transaction, explaining how the IRS approaches, explaining the strictness of IRS is, how hard they're trying to go at this, will be a good opening conversation.
Now, you mentioned earlier the TCJA, or the Tax Cuts and Jobs Act, adjusting things. I know also we recently had the Inflation Reduction Act, which is increasing the budget for the IRS to go after compliance issues and other things.
Absolutely.
Do you see that as something that's going to affect transfer pricing, affect how the IRS looks at international issues?
100%. Like I said, last November, multiple IRS officers that I have read that their statements on specifically about they didn't say intercompany charges. They didn't say that. They specifically mentioned transfer pricing documentation. So we are aware that IRS and not only IRS, to be fair, just any other tax authority around the world, they are going to be, looking out for this, not only for, companies like Coca-Cola or whatnot, but any type of a company that has multinational, or intercompany charges, they will be under review.
And that's because of not just the potentially underpayment of tax, but also the penalties associated with it?
Absolutely. Yep.
And the penalties, just to refresh, you said that was 20%?
20% of the underpayment, yes.
Of the underpayment.
Yes.
Okay.
Yep.
And that's a US issue.
That's from the US perspective,
Okay.
Right. There are different countries that implement different fines. And again, they update some year to year, or they might not, but yes.
Okay. Now, as we're talking about different countries, are there certain countries you've seen that really have strict transfer pricing regulations, or other countries outside the U.S. that when you hear somebody's doing work there, you go, that's one you got to watch out for?
U.S. is definitely very thorough and comprehensive, but I would say Mexico, Colombia, China, and Canada are some of the countries that require their tax authorities required further documentation. So we provided them, but those are the countries that are, in my knowledge, that they're very, detailed.
So China, Mexico, Canada, countries that a lot of manufacturers and businesses in the U.S. do a lot of work with. So that's a pretty all-encompassing list.
That's right.
Now, as we're looking at it, when we're dealing with the IRS, are there certain types of fees or types of transactions that they're really dialing in and you want to make sure are 100% documented correctly?
We observed that the most common ones that IRS is specifically picking are management fees and manufacturing abroad from a U.S. company's perspective, having a manufacturing facility abroad. Those are the two transactions that IRS is very, very much aware.
So if I don't have those two, do I need to worry about this?
100%.
Okay. I just want to make sure I don't have any management fees, so you're saying I still need to worry about it.
100%.
Well, it sounds like this isn't going away, and it sounds like it's probably something that people really need to be aware of. So I appreciate you sitting in with us today and helping walk us through this.
Thank you very much for having me.
Thank you for tuning in today. If you'd like to receive future updates, please subscribe to our YouTube channel, Let's Talk Tax Podcast. Thank you for joining us today, John. I learned a lot about transfer pricing and how it affects people, and I hope other people did as well. But thank you.
Thanks for having me. I appreciate the conversation.